afternoon, everyone. Before we start, we'd like to introduce ourselves. My name is Jazmine Due.
MC Marasigan.
Abadicio.
Jiro Cascolan.
Randolf Mesa.
And we are Team Swaran Buffet, representing Citadel, the UA&P Investment Society. We are pleased to present to you our stock pitch presentation on why we gave Apex Mining Incorporation a buy recommendation. To start, Apex is the Philippines' largest and leading Filipino-owned gold producer, an established and well-backed mining company with strong backing from the Rizon Group, 2 operating miles, and anchored by a multi-subsidiarity platform spanning gold, silver, and oil.
Furthermore, let's look at the bigger picture. So the Philippine gold production is well supported by economic, regulatory, and geographic factors. So we want to point out that it's benefiting with 50% of the mineral economic contribution of gold and making Philippines as the top 20 gold producer worldwide and 3rd largest in Asia. Aside from that, it moves forward with a strong government support with new fiscal policies and mineral policies alongside digitalization moving forward. And the Philippines also has an untapped potential with it being the 5th most mineralized country in the world, leading to a historical forecasted interest in gold production. Given that gold demand is accelerating, driven by the macro, geopolitical, and industrial demand. And I would like to point out as well in the geopolitical, the recent US-Iran war is weakening the petrodollar alongside these other reasons. Which leads to a historic projected rise in gold price. And with that, this benefits Apex as in the Philippine industry, it gives them competitive view even with the barriers of entry. And what are those? So the barriers of entry will be the regulatory complexity, land rights, capital intensity, alongside the operational expertise.
Given these strategies, Apex has 2 key strategies to maintain its competitive advantage, found through Apex unparalleled production through 1, output scale, and 2, operations. This demonstrates already that they have the largest gold output in the industry, despite having a smaller input relative to their competitors, which translates to being more profitable than the rest. This is already further supported by their cost efficiency. Firstly, operations excels at maximizing production while minimizing costs via their strategic geological advantage of having a resource-rich mine mixed with a high volume extractions, which translates to earning more profits for less inputs. Second, resilient and reliable energy, which reduces their exposure to fuel and power fluctuations and mitigate costs and market shocks, which translates to continuous and sustainable operations, and this being done through their geothermal energy. This positions Apex to better capitalize on expansion opportunities to consistently outpace its competitors through 3 key growth catalysts. Firstly, a 72 increase in mine ore deposits due to Mako mine explorations, which leads to higher production and revenue. Second, more gold mines like Hijo were acquired, which secures and scales future production and operations. Third, they can also diversify into copper production and other metals through the Amakan project via AAMRC, which makes them overall less dependent on gold and silver.
Speaking about outpacing their competitors, it is shown with their steady revenue and profit growth over the years, building a strong baseline in regards to their continuity. As as their future revenue is supported by higher production and rising gold and silver prices. turning that growth into greater profit than most other companies in the industry. And it also gets more out of every peso it invests than competitors, showing smart operations. So even while spending more on new projects, Apex keeps earning more on its investments, showing disciplined money allocation. As well as its cash and debt situation is getting stronger, as seen with the declining leverage and increasing liquidity, meaning that it can keep growing without financial trouble. All of this adds up to a company that outperforms their competitors and their historical performance across most financial ratios. As what you can see in our profitability, it is higher than the industry average and their historical performance. Same applies with their financial health and their overall growth rate being faster than their past performance.
But with not one, not two, not three, not four, but 5 valuation methods showed the same key message that Apex is undervalued by the market by 7% to 24%. But wait, there's more. That 7% to 24% upside potential can be even bigger once we focus on our discounted cash flow analysis, which is more forward-looking compared to all the other metrics here that are backward-looking. So our upside potential can be even bigger with this one being more conservative. Our target price can be as much as 22 on the more base case of our intrinsic value, which is completely in line with the analyst consensus of 23 pesos per share. But we are a bit more conservative, that's why we are just showing that they are undervalued by this much, but they can be even more. But even if our inputs are wrong or our calculation, our sensitivity analysis can show that Apex can still be attractive or fairly valued across many scenarios. So even if our growth, discount rates, or let's say the gold price, volume changes, etc., there are many scenarios wherein Apex can still be undervalued or even fairly valued. Next.
Furthermore, the risks are known and manageable with clear ways to handle them. Firstly, gold price decline. This is already mitigated by their already enormous gross profit margin that serve as their buffers. Second, mine safety and flooding. Apex Company has already invested a lot in expanding their tailings storage facility, also known as TSF, which operates as a dump site to maintain their mines and prevent flooding. Third, the regulatory risk of fragmented changes and uncertainties are mitigated by a unified framework called Mining Fiscal Reform Act. Fourth, expansion delays is mitigated through Razon's capital funding, and progress is already found through the Hiju mine acquisition. Lastly, US dollar and peso volatility is mitigated by selling gold in dollars and making expenses in pesos.
Making Apex Mining a high conviction buy with upside potential and a good margin of safety through their right drivers of growth, e.g. accelerating gold demand and support for production, as well as their strong competitive advantage to take advantage of growth catalysts and expansion, which allows them to outperform the market through as seen in their profits that are higher than their peers, while sustainably growing at a faster rate without strain to their financials, as well as it having a high potential to increase in value in the long term. However, we acknowledge that some risks are present, although it can be mitigated through the following. As well as in our sensitivity and risk analysis, we believe that these are manageable. So thank you very much for listening to our presentation, and we are more than happy to answer any of your following questions.
Okay, time's up. Thank you so much, Warren Day. We'll now begin the Q&A session.
Thank you for that. Can you go to your revenue forecast? You guys provided a 10-year revenue forecast in the next 10 years. Can you illustrate to me how this was done?
How this was done?
Yeah. How did you get, what was the factors for leading to higher production output? How did you guys get it? Even revenue?
To answer that question, I would like to illustrate the table that we use for that. But basically, what we did is we get the historical gold prices of what Apex was able to sell them, as well as silver, as well as their historical production value, and then as well as we were able to consider what are their target tons per day, which is 3,500, as well as their given reserves in their Mako and Sangilo mine. And with that, what we did is we forecasted gold prices and silver prices using ETS forecasting. Basically, we want to forecast their gold prices using that method, and we also make that in line with analyst consensus prices. So, with our gold prices, it agrees with the overall long-term trend of gold and silver prices. To answer the production side, what we did is we use their target per day, tons per day, as the target of what their production output will be in the long term. But obviously, it won't be instantly achieved. It will be gradually achieved over time. And then we also take into account reserves for that, because of course the reserves are finite for both mines. So we are assuming that eventually the reserves can go out unless there is an expansion. But luckily, there's a lot of expansions that's happening with the Amakan project and other mines.
It's great that you mentioned the reserves. Can you enlighten me? What's those reserves? What's the current and what's the projected that you guys are planning?
So for here, we can see the reserves for the mines. So this one is for Mako mine. This one is for Sangilo mine. And we also illustrated their revenue and cost for it as well. So it's a combination of, this is forecasted from 2025 to 2036. So it's a 10-year forecast based on historical, their target, and as well as the reserves.
How come you didn't show this in your presentation?
Oh, because we showed this in our net asset value valuation, but we are more than happy to explain it more here in the Q&A.
Next one? Yeah, the next one.
Sangilo mine.
Amikan.
For Amakan, we haven't yet.
Oh, sorry. So just to be clear, your NAV per share is just on these 10 years up until fiscal year 2034, right?
Yes, for Mako. For Mako.
Next slide, really quick. Sorry, the previous one. No, okay na. Like one slide after.
That's assuming there will be no future
Correct.
expansion.
Correct.
And then the Amako project isn't yet reflected here. Amakan project.
Okay.
So our net asset value is more conservative, which means that it can be even higher once we consider other factors and future expansions as well. Sorry? Target price. So for our target price, it's, to be exact, it's going to be our conservative target price is around 16 to 17 pesos per share. That's our conservative. But if we are more forward-looking, we are putting it at 22 pesos per share, which is based on our DCM and supported by our other valuation methods. And it's also supported by the analyst consensus of 23 pesos. So we are more conservative compared to, I'm sorry? We got 23 according to LSEC Refinitiv. This is assuming that
what is the
support gold, we have to go into our gold forecast. Here, so for our gold prices, this is pesos per ounce. 2022 to 2024 is the historical one. 2025, the fourth quarter is also historical and forecasted ones. Combined, it's combined. Because the fourth quarter, we weren't able to get the forecast, the gold price from Apex itself. This is not the spot market gold price. This is the gold price that Apex was able to sell. And then for the forecast here, we have the gold prices here. We can also see the volume as well as silver prices, etc.
Thank you.
Thank you. Are there any other questions?
Who did this? The whole Excel sheet for you guys.
I do.
Very good. Thank you.
Thank you so much. Thank you so much.
That marks the end of the presentation of Warren's Cafe. Thank you, Warren's Cafe, for your excellent pitch. Moving right along, let's see what our next team has in store. Please welcome our next